Good morning, everybody. Welcome to Loan Officer Breakfast Club. We are at it once again, my friends. Total insanity at 5:30 a.m. Pacific time, 8:30 a.m. Eastern time. And ready, set, here we go, my friends. We're brought to you by the Mortgage Marketing Animals every Monday through Friday, 8:30 a.m. to 9 a.m. Eastern time for your free coaching pleasure. And it's always a good time. We've got fun people here always. Chris Johnstone's in the house.
Morning, everybody.
Pounding a mimosa first thing in the morning, as he always does. We have Marlene Chaker. She's our guest today. AI and appraisals. Looking forward to hearing that kind of stuff. All right. You know what, man? Kristen.
What?
Who am I thinking I'm picking on right now? Let me see if you got it right.
Oh, I'm not. I feel like I'm not on the same wavelength as you and Carl.
Jency, who am I picking on?
I'm going to say Ron Smith.
Okay. Who you said? What?
I'm going to say Ron Smith.
No, that wasn't who I was going to pick on, but we could pick on. Oh, now that I look at him. Yeah.
I mean, he's out of this world.
He is out of this world. Look at him. It's wonderful. Ron Smith, what's going on, man? How are you? Can you unmute?
I'm working on it.
Nice. What's going on, dude?
Well, I don't know. Just got back to work Monday. Been on a trip. Changed. I started a few years ago wanting to go to every ballpark in the country, and and then I switched to breweries. I've been working on that.
Sure.
But apparently, at my age, the goal now is to visit every ER. So I visited every ER last week. So that's kind of what I'm doing. So.
All right. Well, I hope that tour isn't going well. You know?
Well, hey, I'm still here, standing upright, a little wobbly, but today our company is we have an all day Hammer 100 call. So,
cool.
So
gonna get at it.
Yeah, I'm gonna get at it. I'm not sure if I get any loans, how I'm gonna do them.
Sure you will. Calling past client database. Who you calling?
Client past database and realtors.
You'll definitely get something, brother. Want to get something, everybody? Hey, man, let's encourage Ron in the chat, everybody. Let him know you got this, brother. You're gonna kill it.
When the janitor comes in, I'll ask him as well.
There you go. That's the way to get it done. What a great. Thank you, Ron.
You're welcome.
Thanks, man. Day. Super appreciate you. Yeah. Well, I was going to call on Ryan Rickey. That's who I was going to call on. Kristen. Ryan Rickey. He just looks like the guy to talk to.
Hey, what's up, everyone?
How you doing, man?
Good, man.
Morning, Ryan.
Good.
What do you got cooking these days? What's happening?
Well, I'm new, and I'm still actually waiting for. Actually, just checked. I'm still waiting for my state background to check to pass. I'm here, learning, and observing, taking notes. Went to the seminar a couple of weeks ago in Clearwater.
Nice. Did you? You're at the boot camp?
Yep.
Right.
Yep.
So just waiting for the background check.
Yes, sir. And then looking for a home. Did
you bribe the parole officer?
Yeah, right.
What most of us do. Yeah.
Frank got his. You'll get yours.
Routine.
Well, congratulations. I always love to ask new people. See, everyone's heard me say this before, I'm sure, is that, you don't find the mortgage business. Somehow the mortgage business finds you. It just seems to be the way it is. Would you guys agree? Raise a hand. You guys agree? Mortgage business kind of finds you somehow. How did that happen with you, Ryan? Like what happened?
A short story. I was in the mortgage business in the 2000 era.
Okay.
I left and became an entrepreneur, started a beef jerky company, traveled around the United States, sold it at fairs and festivals, scaled it up, got relocated to Indian Rocks Beach, Largo, Florida area. My wife is in commercial and residential real estate, and we had some bad luck with loan officers, so I thought it was time to come back and make my triumphant return.
What a great story, man. Right, so, okay, now I think everybody's wondering, tell us more about the beef jerky.
Wait. Ryan was nice enough to bring some beef jerky to
Did you?
Camp.
Really?
Yeah.
Wait, y'all got to eat it?
I think I've sampled every kind. I'm pretty sure. My favorite is the whiskey barbecue.
Ooh. Mine too, actually.
Whiskey barbecue.
Oh, it's so good. Yeah.
Hey, I'll drop a discount code if it's okay. I'll throw it in the chat.
Oh, it's okay. Yeah, it's okay. Yeah, it's definitely okay. Drop the website and the discount code.
You got it. Yeah. Been doing it for 11 years. It changed my life. But just, ever since with this new, with the prior administration and inflation, the way it's gone, it's affected the bottom line. And
Really?
yeah, we know we can see the writing on the wall. It's time to have my plan B become my plan A.
Okay.
You got to get into Buc-ee's or something, Ryan, because they've got
Yeah.
a wall of beef jerky.
Yeah. Oh, I know. We love Buc-ee's. It's fun. The hardest thing is figuring out the B2B. I worked on it. I've tried many different things, thrown thousands of dollars at it, and just haven't been able to crack that code. Our best way is B2C, and we'll still have that, and we'll write it till it goes away. But yeah, we're to really live the dreams and live the life I want for my wife and I. And we need something else. We need to go higher.
I might, Frank, if I may, Ryan.
You may.
Yes, sir.
Man, I know how to make a bag of beef jerky way more profitable.
Let's do it. I signed up for your call for Friday.
Oh, sweet. Awesome. Build it with Chris will be fun. But take your list of qualified real estate agents, put a bag in the mail, ship it to them, get the appointment, and get that mortgage business, man.
That's true.
Listen,
jerky to nail appointments.
The way to the heart is beef jerky. I'm telling you right now.
Wow. What a cool story, man. I think that's worth a podcast, maybe.
Yeah.
Yeah. Well, all right.
I got stories.
Yeah, I bet you do. Yeah. Good stuff. All right.
Thanks,
well,
y'all.
hey, man, let's go ahead and get to our guest.
What are you going to do? I'm so excited to talk to Marlene, but are you going to do Flux Capacitor Wednesday?
Thank goodness you are here, Kristen,
I'm here to
because
help
I
with your
would have blown
senior
right.
moments.
I would have blown right past it. It's Flux Capacitor Wednesday before we bring on Marlene. Okay, guys, we're going to get the Flux Capacitor put into the chat. And guess what percentage of the year we have left to? There it is. Flux Capacitor is. We've only got, let me say it, 20%. 20% of the year is left. 20%. Still time. Like Jim Carrey, right? In Dumb and Dumber. So you're saying there's a chance, right? Yeah. No, there is still time. 20% to push the gas pedal a little more, to get over the hump, man, and hit the goals. Curious? Just put in the chat if you're ahead of schedule, at par, or maybe a little behind. Where are you at? Where are you at? And then Marcio already put it in there. 64 days till Christmas. The DTC meter. That's what we should call it, the DTC meter. Yeah, it's at 64. So about this time, Kristen's got at least 2 trees up in the house, right? On her way to 7 or whatever it is you put in the house. I forget. But
Sure.
yeah. If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time.
Wait,
All right.
there. I put up the Christmas lights just for you, Frank.
I know it. Say, hey, Marlene, what's going on? How you doing? You're muted. Okay. Hey, so are you a Christmas junkie? Are you like, do you get all dutied up in the house and all that kind of stuff?
Absolutely.
Yeah.
Yes.
Yeah. So I'm just curious, 64 days to go. You got all your Christmas shopping done?
Oh, no, not yet.
No. All right.
But we will get.
All right. Put it in the chat. Where are you at on your Christmas shopping, guys? Where are you at on your Christmas shopping? Is it done? What are you, 50%, 20%, 0%? Where are you at? Just curious. Just want to see that as well. All right, Marlene Chaker, we had you here before, and I was nervous. I was reaching out to Marlene a couple months ago, and I couldn't get hold of her, and I was panicking. Like, I was wondering if she was okay. Turns out she was abroad. Not abroad, but she was away, like abroad and traveling, because she's kind of that way. She's an international sort of superstar. I don't know if you guys are aware of that, but she is. She gets pulled in many directions across the entire globe. And she was, globetrotting and out of touch. But she got back in touch, and she's here now. And we're going to talk about, you tell us, Marlene, what are we going to talk about today?
AI and the
AI.
appraisal industry.
Mm. What's
Shall I?
cooking?
All
Yeah.
right. Well, good morning, everyone, and thank you so much for having me again. So, as some of you know, that I've been in the industry for close to 25 years. And during that time, I've seen tremendous changes. It never ends. From traditional paper, like the legal size that we used to deliver in person, to the tech-driven system we're working with today. Today, I want to talk about the evolving appraisal landscape, specifically how technology and AI are reshaping our work, what agencies are expect, what appraisers are actually experiencing, and how we can bridge those two worlds.
Mm.
As loan officers, it's important to understand what's happening behind the scene because it directly affects your turnaround times, your communication with borrowers, and the trust they place in you. We are at a unique crossroad right now. Market forces, regulatory changes, rapid advance in technology, specifically the AI, they're all colliding all at once. Agency and lenders want speed, consistency, and transparency. Meanwhile, appraisers are focused on accuracy, ethics, and compliance. And here's why this matters. The appraisal isn't just about numbers. It's about fairness, trust, and risk management. The public expect accuracy, regulator expect compliance, and lender expect fast turn times. That balance is what we'll explore today. Where do you as loan officer fit into all this? Your role is crucial. Understanding what AI tools your agency or AMCs are using helps you set borrower expectation correctly. You also act as the bridge between the appraisers and borrowers, making sure context and nuances are communicated clearly. And when needed, you can guide borrowers through the reconsideration of value, the
Mm.
ROV process, if something doesn't align with expectations. Let's first look at where our industry stands today. Interest rates have played a role in transaction volume, but demand in certain regions remains high. We're facing a shortage of active appraisers, which increases turnaround pressure. Agencies are tightening oversight and introducing evolving policies. One is actually is going to start next week. What do I mean by tightening oversight? Agencies like Fannie Mae, Freddie Mac, FHA, NVA are asking for more structured and detailed reporting through changes like the UAD before, and now next week 3.6 format. They're also relying heavily on AI-driven quality control tools to scan reports for inconsistencies or missing data, which means more revision requests for appraisers. At the same time, they're increasing scrutiny around bias and fairness in valuations. As we all know, we've been facing this, and it's there. They're requiring additional commentary and training, and they're testing new product types like desktop and hybrid to speed up the process. In short, agencies are asking for more data, more consistency, and more compliance checks. That might sound good in theory, but in reality, it means longer reports, more revision requests, and more liability falling on the appraiser's shoulders. In fact, in the survey I recently conducted, so I'm not just saying, numbers from me. So I sent a survey to my top 100 appraisers across the country. 82% said their workload has increased due to agency and lenders requirements over the past 2 years. That's a huge number. And it tells us that the pressure from above are very real. I'll give you a short story example. Think about two appraisers working in different markets. One is in Phoenix, where value shot up during the pandemic and have cooled since interest rates climbed. The other, let's say, is in like small Midwestern town, where values have been flat for years. On paper, both are appraisers in the US, but their reality are completely different. That's why agency policy can feel out of step. What makes sense nationally doesn't always fit locally for all appraisers. Another challenge we cannot ignore is the pipeline of new appraisers entering the industry. In my survey, nearly half the respondents, that's a lot, said they are not interested in supervising trainees.
Mm.
The most common reason was fee structure are too low, the liability is too high, and the workload often make it impractical. Several appraisers told us plainly, with today's fee, the time and risk simply overweigh the benefit of training someone new. A few also mentioned, which is very crucial, that unless clients and EMCs are more open to accepting work from trainees. And what I mean by that, because where the appraisers sign on the right side is where the trainee will sign to collect like the 2,000 hours in different states or 1,500. They're saying it doesn't make sense, like financial sense, to bring them on. One respondent said the fees would have to be way higher than what it is now because the appraiser's fee now are not worth the time, the cost, and like all whatever they're saying. So this reluctance to train means we're not replenishing the profession. As many senior appraisers retire, the shortage could become more severe. They've been saying for 5 years that the average appraiser is more than 55 years old. For agency and lenders, this is a critical point. Without supporting trainee pathways, the long-term sustainability to the appraisal profession is at very high risk. Let's go back to AI. AI is no longer theoretical, it's here. And we all know we've been using the AVM for qualification and risk scoring. Photo recognition tools can identify property condition from images. Data scraping analytics are helping forecast future markets. As my chief appraiser, Mark, put it this way, our industry is no longer based on location. That thing I used to hear is from day one. But instead, now it's technology. He described how appraisers are trading clipboards and tape measures for digital tools and automatically generate floor plans. That I liked. That was like something that the least I like, just measuring and writing it down. So floor plans with these, I'm all for. So that's where we are today. AI is embedded in many aspects of our workflow. Let's go over what AI can actually do and what can it do. On the positive side, it's fast, scalable, and cost efficient. It provides consistent data pools. It reduces clerical errors, but there are risks. It lacks local market nuance. It can inherit bias from its data. And perhaps most importantly, there's danger of over-reliance. If one appraiser makes a mistake, it's one report. If AI makes a mistake and lenders rely on it for thousands of loans, that error can get multiplied across the system. In fact, my survey showed that the top concern appraisers have is the loss of professional judgment, chosen by 58%, followed the accuracy of result of 50%. I mean, those high numbers. For Susan, my compliance appraisers vendor, she's awesome, said AI may be great at flagging missing information, but only human expertise can determine whether the commentary actually makes sense. That balance is critical. Let me give you a quick example of what I mean by market noise. AI might look at two homes side by side and say they're equal. Both have 3 bedrooms, 2 baths, let's say 1,800 square feet, and were sold within the past few months. On paper, the data lines up. But here's what the AI misses. One home backs up to a busy highway while the other faces a quiet cul-de-sac. Or maybe one has a newly renovated kitchen while the other hasn't been updated since the 80s. To a buyer, those differences can mean tens of thousands of dollars in value. But to the AI, they look identical. That's why human judgment is still so critical. We see the nuance that algorithm can't. What I think the best path forward isn't a replacement. It's collaborating, working together. AI can gather and process data, but the appraiser must interpret it and explain and apply judgment. Susan summed it up perfectly. Used alone, AI can miss important nuances, but paired with an experienced appraiser, it becomes a powerful tool. That's the sweet spot. Now, let's look at agency and lenders. What are they expecting? Their top priority are, as we said, faster turnaround time, lower cost, uniformity in valuation, seamless integration of technology, and that can become a nightmare. From the agency and lender perspective, AI and automation seem like the obvious solution. But here's the disconnect. In my survey, appraisers said the biggest gaps between agency and appraisers are in data requirement method, the fee pressure. Each of those was mentioned by about 27% of respondents. So while agency wants speed and uniformity, appraisers are struggling with added complexity and pressure. Let's bring it back to the ground level. Appraisers face a reality that agencies sometimes overlook. The USPAP compliance requires diligence and thorough analysis. Complex properties often need in-person expertise. Liability ultimately falls on the appraiser, not the agency. After all, it's their license, it's their livelihood on the line. One survey responded, and he put it bluntly, said, it's funny how the requirements for AI or AVM-based appraisals are much lower than for a true appraisal. That alone should tell you it's a joke. The survey respondent here is pointing out at a double standard between AI-based valuation and traditional appraisal done by a licensed professional. Because the traditional appraisal have very high standard. When you as a certified appraisers complete a full appraisal, you must follow USPAP, the Uniform Standard of Professional Appraisal Practice. That means detailed analysis, commentary support for adjustment, physical inspection requirement, liability. They sign on all this, like I personally did this, and that.
Morning.
The bar.
You're good.
Sorry.
No, it's okay. We got him.
Okay. Yeah, where were we? So the bar is very high, and mistake can have professional and legal consequences. Appraisal, like the AI appraisal, they have much lower requirements. They don't have to follow all those. AI-based tools often don't have to meet the same standards. They may pull from incomplete data sets, skip neighborhood inspections, and generate a value with little transparency about how it was calculated. Agencies and lenders sometimes accept these lighter requirements because it's fast and cheap. Oh, one respondent from the survey said, if AI had to meet the same rigorous standards as human appraisers, they would fail because they don't provide that depth of analysis or documentation. The fact that agencies still accept them, even with weaker requirements, makes some appraisers feel like the process is a joke compared to a true appraisal. Mm-hmm. In other words, they're saying, if you're going to hold me, a human, to this extremely high standard, why are you letting the AI slide by with much less? Now, remember, technology, it's not free. The new UAD 3.6 form has more requirements, not fewer. which will add to production time and likely increase appraisals fee, not lower them. Here's a simple reality. AI might flag a comparable sale across town as a perfect match because of the size and the age. But an appraiser knows that house sits in the flood zone, something that dramatically changes marketability. Or imagine a rural property without outbuilding that's been converted into a guest house, and we have those thousands of those property across the country. AI may see it as an extra square footage, while an appraiser knows zoning rules mean it can't legally be rented. Those are the real world details that protect both lenders and borrowers. So how do we close the distance between agency expectation and appraiser reality? I would say education. Agency, lenders, and appraisers all need a clear understanding of both the strength and limit of technology. We should always have like a limit where we can stop ordinance. And then collaborative standards. We must build shared guidelines that prevent conflict. When I mean by that, because sometimes like a revision comes back from an underwriter and say, have the appraiser sign on that we got the, like for the roofer that, we signed off, and then appraiser will push it back. She can, or he can sign it. The underwriter can do it. I don't have to do it. So this is where like we have to have the shared guidelines that prevent the conflict. Also, process like reconsideration of value, we talked about it last time. It gives borrowers and appraisers a voice, improving accuracy and fairness. Now, when people ask me, Marlene, what do you see the future look like? I strongly believe AI adoption will continue to grow, of course, but with more guardrails. We may see new roles like valuation analysts to oversee AI output. Transparency and consumer involvement will increase, and the role of the appraiser will evolve from data gatherer to data interpreter. As I mentioned, AI adoption will continue to grow, but with more safeguards in place. For example, and that's very important, monitoring AI outputs for potential bias and valuation, requiring an appraiser sign off on any AI-generated report, and stricter data transparency rules so lenders and regulators know exactly how a value is calculated. Using tools like the ROV process as feedback loops to ensure borrowers and appraisers can challenge or correct AI-driven results. Despite the challenges, there's opportunity here. In fact, when we asked appraiser what their most valuable contribution will be in the future, 66% said human judgment, far more than any other choices. I'll give you another example. Picture a role of the appraiser 5 years from now. Instead of spending hours measuring rooms and entering data line by line, much of that will be automated. The appraiser's time will be spent interpreting and checking. Does this comp truly make sense? Are we capturing the story behind the numbers? In other words, instead of being the data gatherer, the appraiser become the data storyteller. As we wrap up, I want to leave you with this thought. AI can tell you what the numbers say, but only an experienced appraiser can tell you what the numbers mean. That's the essence of where we're headed. AI is a tool, but appraisers are the interpreters, the protectors of credibility, and the bridge between data and decision making. I want to leave you with a personal reflection. I've always believed in this fantastic industry. I love our industry. In my almost 18 years of running my EMC, I've seen tremendous changes. And I'll be honest, there were some times I thought that this is it. This is the end. Like, there's always changes. This is not, they always like make it big deal. But to be honest, we've been through it so many times, and so many times I thought, this is it. But every time, to my surprise and pride, we came together. We collaborated. We found solutions, and we adapted with open minds. That's who we are. as an industry. Thank you again. And if you have any questions, let me know, or you can always reach out even if you cannot, ask all your questions today.
I thank you, Marlene. By the way, that's great. We really appreciate it. Appreciate you very much. But I'm going back to, because I think you're right. Like when it comes to the appraisal side of the equation in AI, think appraisals are one of those things, and I mean, to a certain extent, I think loan officers too, right? You got to have some sort of human check balances on it, right? No matter what, no matter how good it gets, you got to have some human checking in that. And what I was gonna ask you is you also mentioned that so you're going to always need the person of the appraiser, right? I think, if that goes away, that'll be quite incredible. But I think you'll always need the person behind the appraisal. Hi, thanks for enjoying Loan Officer Breakfast Club here on YouTube. I just wanted to drop in and remind you that if you're a newer loan officer and you're trying to get to that 2 or 3 deals a month, or if you're seasoned and you're trying to get from 50 to 60 or 60 to 80, Mortgage Marketing Animals has you covered. We've got the full gambit from start to finish, top to bottom. Everything you need is at mortgagemarketinganimals.com. There's a reason that mortgagemarketinganimals.com is the #1 mortgage coaching platform in the country. So check it out, mortgagemarketinganimals.com. So, and you were also mentioning that, how difficult it is to get newbies ramped on, how challenging that is, do you think that's going to, do you think those standards, maybe like 2,000 hours you were saying or something like that somebody has to be mentored? Or do you think with AI that maybe those standards might get lessened a little bit so you guys can get more bodies into the industry?
That's the thing that I was mentioning, because regulators and AI, they don't really communicate together. They don't. Now they did lower the hours. It used to be at my time, 2,500.
Okay.
It's in California, 1,500. Some states are 2,000, 1,500. Every state is different. And they did change that. Few years ago, they made it you have to have a degree in order for you to go for your appraisal license. I mean, imagine, I went for engineering, 4 years degree, and then now I need 4 years to become an appraiser. Well, I could become a plastic surgeon and make so much more money. It doesn't make sense. So now they took this off. You don't have to have a degree, and you can do that. But they've been talking about this. Everyone has been the whole industry has been talking about this for years. But what are they doing? No one is doing anything about it. Nothing. If I was in charge, what I would do? See how every 2 years you need to take the continuing education and 7 hours use PAP or whatever.
Yeah.
I would add that you must, in your industry, in the life of you being an appraiser, you must bring on a trainee and train them. So in that way, every appraiser will have an appraiser taking after.
They basically can replace themselves or add another one as the others are going out. That's a good idea.
And we're not saying that it's going to stay. Like I said, our industry changed tremendously since I started, and it's going to continue to change. Maybe we were not having the appraisal the report that we're doing today. So it's going to be all the AI gathering information, but the appraiser will be reviewing and checking and saying yes.
That's what I was curious about. Yeah, like since it's going to be that hybrid, more and more, it's going to become the hybrid of the AI with the human. Maybe those standards can be changed differently, or the criteria gets changed or modified so that we can bring more bodies in to do the human aspect. Everybody wants to know how to get a hold of you. What's the best way to get a hold of you if they got questions?
My number and my email is always.
Can you drop it in the chat? Can you drop it in the chat for us, Marlene?
Absolutely.
Yeah. Thank you for that. Yeah.
Of course. Okay.
And then let's see. Anybody have any questions? Have we been monitoring? I really have been monitoring the questions.
Yeah, oh, I'm sorry, Jen. Do you want to go ahead?
No, you go ahead, dear.
All right. So Robert wants to know, what's your thoughts, Marlene, on desk appraisals and how long 90 days old for ordering a new appraisal on a property?
The desk appraisals, like, yeah, they've been using them. And how long? Sorry, can you say the question again?
Yeah, he says, how long, say 90 days old for ordering a new appraisal on a property? So how long would you, wait, I'm assuming.
Oh, before you had to do it again,
Yeah.
basically.
It depends on the lender and on the type of the loan. Sometimes you need it every 6 months or every 3 months.
Hmm. So that's going to be guideline driven then.
Yeah, or it depends on the investor too. I mean, sometimes there is some guidelines, but not necessarily that the investor always goes by the guidelines. Sometimes investors, they have their own, like they add more or extra guidelines. Like, for example, like the trainee signature, even though like this is part of our industry, and then the trainee can have and should and collect, but the guidelines for that lender, he doesn't want a trainee add signature.
That just needs to be unified across the board somehow.
Mm-hmm.
Yeah. Is that what you were discussing at MBA? Is that your pitch?
I just go and listen. They're all talking about AI. Wanna laugh? You wanna I'll tell you something. I even asked the AI about this, and the AI was giving me those informations and helping me with my survey. Like, it's true or not? Can you believe that?
Yes.
Like, AI is telling me, yes, it's good to have, but the AI cannot see, like the freeway behind the house or not. Not yet. I mean, listen, I'm not gonna say I cannot say it will not change. Maybe they're gonna make work on the AI more. I'm sure with time we'll reach that the AI will be able to identify or get better result.
Bill Hedrick's got a good point. He basically, without appraisers not being willing to train other appraisers, do you think it's a I don't want to train my competition kind of a thing a little bit, or does that not really apply?
I mean, it's a point, but I never really thought of it like this. Not necessarily, because like I said, we're losing a lot. We need more appraisers. Some rural areas, there's only 2 or 3 appraisers that are. So even if I get upset from him, like he's not replying to me or whatever, do you think I have a chance to go and get another one? No, I have to stick it up and take it. And there's that, and they know themselves where they say, look, she can't. I'm the one. She's gonna come back. Whatever she's gonna go, she has to deal with me. So we are like in a big, huge shortage for appraisers.
Interesting stuff.
Let's see. Now I'm looking at this. I don't know. Like, it's a recipe now here. I'm seeing.
What are you looking at?
The chat's also going. There's some.
There's a lot of beef jerky talk.
The beef jerky talk is still going. Yeah.
Yeah, that's still rolling. Yeah,
some questions because I saw it going.
All right, let's get your contact in once again. Let's do a copy paste there, so it's easy for us to do. So if someone could do that, because apparently I'm inept and can't do it. Yes, I can. I've got it. Okay, I've got your email address going into the chat again. If you want to reach out to Marlene, her company is AAA AMC. So it's AAA-AMC.net. AAA-AMC.net. I've known Marlene for many, many years, and I remember, when she was just an appraiser, you know what I mean? And then she blew up to become her own AMC when all that went down. So she's been around a long time, right? That was a neat thing about you too, Marlene, is, you were an appraiser and everything went to AMC. And I remember chatting with you. It's like, well, then I need to become an AMC, that's where the money is, so that's what you did. You became an AMC.
I was getting my license then when this whole thing happened, and I added our name on few AMC lists, and for 6 months I didn't get any order. I'm like, okay, you don't want to put me on your list, I'm gonna create my own list, and that's how I started.
That's what I appreciate.
What were you thinking? Now I know for sure I was not thinking. I have no idea what I was thinking, but yeah, here we are today.
Really? Because none of us feel that way about ourselves at all.
Oh my God.
Oh, that's really weird. Yeah, that's how we all are. Good stuff. Well, Marlene, thank you so much. Love to have you back again. Appreciate you. Don't forget, reach out to Marlene. Her contact information is in the chat. You can just talk. She's happy to chat with you guys and talk appraisal stuff. Yeah. So you're at MBA right now. You live in Vegas, so that's fortunate. But
So I'm leaving now after I'm done here. Thank you.
to go to go to the event. Yeah.
Bye.
All right. All right, Marlene, thank you so much. For the rest of you guys, thank you so much for joining us. We'll have Owen Lee here tomorrow, and then we'll have Chris Johnstone on Friday. Chris, while you're here, what do we got Friday?
Oh, so on Friday, we're starting something brand new.
What is it?
Frank, what I've done is I've put together a whole sequences of Breakfast Club classes that we're going to do on Friday. I had an organization that, one of the major mortgage conferences, I came in and I did a breakout room of just top producers. And I said, okay, on AI, like, what is your level of comprehension of AI from like, I don't have an account to like, I'm using it to process loans. And more than 75% of the room was like, I'm just getting started with ChatGPT. I hear AI in everything.
And this is top producers.
These are like the top of the top. And I had this epiphany of just like, oh, wait, maybe we should go back to the basics and just like set up our ChatGPT account, get our settings set, get our prompt structures ready, start from the very beginning of just like, if you have no idea where to start with AI, just start here. And so for the next 12 weeks, I have a structured course that we're going to go through on Breakfast Club every Friday morning, starting from here's ChatGPT in a brand new account, setting it up. Every week goes in sequence.
Wonderful. That'll be awesome. Good stuff. Thank you for that.
Yeah.
All right. Good stuff. Okay, guys. Well, look, today is Wednesday. So today is Past Client Database Day. Use your AI, use your phone, get on Call Stars, make those calls and shake the trees and get some business out of it. You guys have a great day. We'll see you here tomorrow with Owen Lee. Catch up with you later. Loan Officer Breakfast Club. Adios.
Have a wonderful day, everybody.